Welcome back to Alberta Primetime, and the vocal point now, not a boom, but maybe a boomlet. The latest on our provincial economy and your electricity bill. Will we ever know what was behind suspicious blackouts and price spikes this month? Expert opinions with our Monday Money panel tonight. Russ Stratwa is a senior investment advisor with Canaccord Wealth Management. Shafik Hirani is a senior director with Investors Group Calgary. And Todd Hirsch is senior economist with ATB Financial. Good evening, everybody.
Good evening.
Good evening.
TD Economics is forecasting now Alberta will lead Canada this year and next in growth, but our province will not return to our last boom levels. Todd, do you agree with this latest forecast?
Yeah, I do. And actually, I've been seeing some, signs of moderation in Alberta's economy moving into the second half of the year. I actually think that's really positive. So I don't want people to be thinking, this is bad news story at all. You don't really want either of those B words. Definitely not a bust. But even the boom, it brings too many imbalances to markets in the province. Some moderation in growth going into the second half of 2012 is actually positive.
And Shafik, TD also predicting housing prices in Alberta will buck the national trend, and we will start to see some rise there. What do you see? Do you agree?
Yeah, I'm a little bit more skeptical on housing prices, because housing prices are a little bit of a lagging indicator on what happens with oil and gas in Alberta. So there's three major things that affect us. One, the budget itself is very cyclical based on the oil and gas prices, and if oil and gas prices go down, housing prices tends to go down. So there is a little bit of a concern on our end about what's going to happen with housing sales.
Russ, does this newest economic forecast give you a little bit more of a navigation needle onto where is maybe safer to invest, which sectors?
Well, I certainly hope Albertans are using this as to put themselves in a position of power. I mean, with the economics, we're sort of an island in this global mess.
Yeah.
And the two things that Albertans should be doing is paying down their debt. You never go wrong doing that, and then look at repositioning your portfolio, because when times do turn sour, and it's just going to trickle down to us, you're going to have that cash and the lack of debt where you can take advantage of this.
Todd, federal NDP leader Thomas Mulcair visited Stampede. I know you were there too. Don't know if you bumped into him or not. But of course, he was packing his anti-pipeline message for the Calgary crowd. Does he have an impact on those projects that are so important for our province going forward, or not?
I don't think so, not around boardroom tables. I think people are paying very close attention, obviously, to what he's saying, and there's a lot of political tension that this creates. But in business circles, they're watching closer the price of oil, what those things are doing, rather than necessarily so much what Mr. Mulcair is saying at the Calgary Stampede. Especially
when he probably won't be getting too many votes in this province on the next election. Shafik, is Mulcair's continuing anti-oil sands, anti-pipeline message hurting companies themselves? We heard Todd talk about the boardroom, but what about the stocks themselves?
Yeah, his comments won't really sway the stocks either way. He was slamming the Enbridge Northern Gateway pipeline towards Kitimat, and there's the U.S. Transportation just came out with a scathing report about the way they handled the previous oil spill. And so, while Mulcair's comments won't win any votes here, nor would they, his concern is to the constituents in Ontario, and they need a lower Canadian dollar, and as oil goes up, the Canadian dollar goes up. Right. That's his main agenda.
Russ, China's economy probably far more important to Alberta than the leader of the opposition. What are we seeing on that front right now? Do we know anything more about a possible Chinese contraction at this point?
Well, they're slow. Most economies would dream for that, around 7 or 8%, depending on who you believe. I mean, the U.S. is just struggling to stay above water, and Canada is certainly reaping from what China's been doing. But to go back perhaps on the oil, I mean, we have to remember that the 2013 BC elections for the NDP, if you think it's tough getting the gateway now, imagine if the NDPs do get into BC. So I'm thinking a lot of this has to do with the upcoming elections, because politics is only in power if
right.
That's when it's going to happen, if they have power.
Next up, your electricity bill. Are Albertans the victims of market shenanigans, maxing out on blackouts and prices when Alberta Primetime returns? Welcome back to Alberta Primetime and the Monday Money Panel. 6 suspicious generator shutdowns, maximum price spikes, accusations of market manipulation. The province's system administrator and energy minister are promising to find out what happened in Alberta days ago. Todd, what is your assessment here? Were Albertans victimized, perhaps?
Well, at this point, I can't speculate if there was any wrongdoing, but it's the kind of situation, you know, we've, as a province, we've opted for this sort of quasi-deregulated system where hourly prices or by the minute are set in a supply and demand situation. It's the kind of situation that does yield itself to opportunities to game the system. I'm not suggesting anyone was, but there's the possibility that you can do that.
Shafik, does it pass your sniff test?
You know, it's like, you know, there's a good analogy. If you're driving and all 4 of your tires blow all at once for 4 different reasons, you might want to ask what's going on with my tires. And so in this situation, 6 generators went out, 2 natural gas, 4 coal, all on the same day at the same time. So it does both,
worth looking into.
Look into it, yeah.
Shafik, should the Alberta electricity market put in more natural gas-fired plants? We've got so much of it and it's pretty cheap.
Yeah, that's going to be the end-all result at the end of it if they do look into it. 1, will there be a scope of investigation? 2, what about the natural gas and the energy utility framework? And there will be a call for a higher price cap from 1,000 kilowatts to 3,000, plus more natural gas infrastructure into Alberta.
That's going to be a little difficult to do. I mean, you're looking at natural gas is at 30-year, dramatically low, and developers want a set cost. So, I mean, natural gas price most anticipate will just go up down the road, so it's going to be difficult. And don't forget the environmentalists, not in my backyard.
The NIMBY, nobody wants the plant near them.
Very tough road to get these developed.
Is there a flip side to our complaints about what Todd described, a halfway deregulated market? We feel like we're pawns here and the power companies still have a monopoly. Is there a flip side? Could we be making money from them?
Well, everybody, the headlines are the $1,000 per megawatt hour, but what doesn't make the headlines, there's also been times where it's been $0 bid, and they won't shut the plants down, so they'll accept those bids.
So we're not being that badly serviced overall?
No, evidently 2011 was $76 per megawatt hour, and it was $60 the last quarter, so it's...
and you can invest in these companies. If you don't like them making money, maybe you might make money with them.
There's a local utility company that pays a very healthy 5.2% dividend, so with generation plants not in the near future, it is an opportunity to add to your portfolio.
That's not a bad rate in these markets.
In these rates.
Let me ask all of you what you're watching for a little bit later this week. Todd, we'll start with you. What's on your radar?
Well, I guess the big news, kind of a quiet week actually in Canada for economic news, but tomorrow morning we will see the Bank of Canada and their regularly scheduled fixed announcement date. There's no chance at this point they're going to be moving on rates, not even a rate cut, I don't believe. Certainly not a rate increase. But I think it will be interesting, as always, to watch the wording of their press release. The people at the Bank of Canada, they agonize over the wording because it's the wording that sends signals to market what they're thinking in terms of when rate increases could possibly be anticipated. So that's what I'll be watching tomorrow morning.
And also some U.S. housing starts coming out soon, Todd.
Yeah, and I think that's always a good barometer of the general health of the U.S. economy. It was a housing market collapse that precipitated everything 6 years ago. We're watching these housing numbers in the United States. It's still very, very weak, but I'll be watching them Wednesday morning for some hopeful sign that we're moving in the right direction with the housing market.
Shafik, we've also got inflation numbers ahead of us this week.
Yeah, inflation numbers are coming out on Friday, and inflation numbers we're hoping for nationally around a 2% average. They should come in line. What I'm really keeping an eye on is what Todd was saying. It is Mark Carney's speech, the
Bank of Canada.
Bank of Canada, and the wording in that.
Russ, in your weekly newsletter, you're telling your clients that we are now in a range-bound market. What do you mean by that?
Markets are generally forward-thinking about 6 to 18 months, so you have to try and bring out the crystal ball and see where the world's going to be in 6 to 18 months. I mean, we have 3 major powers. I mean, China's slowing down. The U.S. is just struggling to stay above water. And then you have Europe, 17 communities trying to come to a unified decision. So
those are going to put limits on the market?
Very much so. So you're going to see great earnings perhaps rise and the underlying stock prices, but every headline, if it's not utopia, it just craters the stock. So it's going to be very tight up and down probably in the next 6 to 18 months, unless there's something that I'm not aware of in the horizon.
So then how do you deal with clients? And Shafik, maybe we'll ask this of you too, because you're doing the same line of work. Do you just become more choosy with what you're investing in?
Yeah, 100%. I mean, the first thing the client you have to take a look at is make sure all your clients' money isn't in just Canada, because Canada is only 2 to 3% of the world's market cap, and a lot of Albertans tend to put all their money here. So you might want to look at diversifying across sectors first. Once you look at, geographic first. Once you look at geography, then you look at sectors. Then it boils down to the individual fundamentals and which security you're investing in.
Todd, anything to add on this topic? Range-bound markets?
Well, it's a little bit out of my area, but I would suggest, it all is sort of the financial markets, the economy in the summer of 2012. We're in this odd kind of space right now, I would say. I call it the liminal space, where we're kind of between things, and there's not a lot of direction going on in any market that I'm seeing.
Okay. Finally, the dreaded performance review. We're going to talk about what happens at your own workplace. A recent survey for account temps shows that management, 91% absolutely love them, but 57% of employees only find them very useful. Todd, are Alberta employers as likely as any to even conduct performance reviews? They're probably so busy just keeping up with our growth, not to mention attracting and retaining workers.
Yeah, well, in a lot of companies, they're mandatory. So it's sort of set out in their policy framework that these performance reviews must be done. So even if people are busy, a lot of HR people they're doing these performance reviews, or they're expecting managers to do the performance reviews. I think they're probably a good thing, even if some of the the employees themselves don't necessarily like them.
Russ, you've got staff. Do they work?
Well, you know what? It reminds me of my adolescent years when I was a junior management in the food service industry, like most of us probably were. And giving assessments to people in their 40s, it just scared the bejabbers out of me. So I used to make them write their own out.
Right.
And it was amazing how hard they were on themselves. So I just found it was people, the miscommunication of what I feel you should be doing versus what you should. If you had the same goals lined up, in print, there's no argument, and it's less, but it was funny. It was a good flashback.
Shafik, final thoughts on the performance review to take us out?
We do need them. The only problem about performance reviews is I think sometimes it's a bit of an ego conversation. People don't like investment advice or any performance advice because it's personal, and people love to give advice, so it's a little bit of a dichotomy.
Thank you all for your time tonight. Russell Dratwa is a senior investment advisor with Canaccord Wealth Management. Calgary's Shafik Hirani is a senior director with Investors Group, and Todd Hirsch, senior economist with ATB Financial, in tonight as well.